What's going on, guys? It's Kuz, and I'm bringing you an introduction into options trading. This video is directed for beginners, and I'm going to be showing you guys the in and outs of options. What is options trading? This is the ability to make a prediction on whether a stock will go up or down within a certain period of time. Essentially, you're taking a bet if you think the stock is going to go up or down. When it comes to option trading, you're allowed to make money on a stock without ever owning a share of the stock. You're buying a contract that will increase or decrease in value based on the parameters towards the stock. The power of options trading is that it gives you the ability to trade with smaller amounts, and you can make money as the stock falls. So throughout this video, I'm going to be showing you guys examples of option contracts and what to look for in these option contracts. I am using Webull. If you guys want to sign up for a Webull account, there's a link down in the description. You just download it with my link, deposit any amount of money, and you'll get some free stock. So when you're looking at option contracts, you're going to have two choices when it comes to this contract. It's either going to be a call or a put. A call is when you're bullish on a stock, and a put is when you're bearish on a stock. So essentially, a call is when you think the stock is going to go up, and the put is when you think the stock is going to go down. So then you have the strike price, and the strike price is essentially a price at which a call or put can be exercised, and that's shown in this picture right here in the middle. And then you have the expiration date, and that's a date in which your contract will expire and become worthless. After your contract expires, there's no value to it, and you can't do anything with it. It'll just disappear. I'm going to be going more in depth on these and showing you guys how to look at these contracts and what everything means. So next you have your option Greeks. So when trading options, you're presented with a contract, and that contract has several values. The important values would be your Greeks. These values give you an idea of how your contract will move. It's important to know this because some contracts have bad Greeks, and it's not favorable if you're trying to become a profitable trader. So starting off with your first Greek, that's delta. The higher the delta, the bigger the price change. Delta measures how much an option contract can be expected to move for every $1 change in the price of the underlying stock. A delta of 0.40 means the option price will theoretically move 40 cents for every dollar change in the price. The delta will increase and approach $1 as the option gets deeper in the money. The delta will decrease and approach -1 as the option gets deeper in the money. So next you have theta, and theta measures time decay. It tells you how much the price of an option should decrease each day as the option gets closer to expiration. When theta is higher, this means you're making less on the move. On this little diagram on the right, you can see the difference in time decay compared to what type of contract you're choosing, whether it's at the money, in the money, or out the money. You can see that out the money contracts have a higher time decay, which means that you're losing more money each day as it gets closer to expiration compared to a contract that's at the money. Now we have gamma. This is the measurement of rate of change in an options delta over time. The rate of change in an options delta per $1 change in the price of the underlying stock. Gamma decreases as an option gets further in the money and delta approaches 1. Vega is what measures the rate of change in an options price per 1% point change in the implied volatility of an underlying stock. It's one of the most important factors affecting the value of an option. A drop in Vega will typically cause both calls and puts to lose value, and an increase in Vega will typically cause both calls and puts to gain value. Neglecting Vega can cause you to potentially overpay when buying options. Lastly, we have Rho. This measures the expected change in an options price per 1% point change in interest rates. It tells you how much the price of an option should rise or fall. As interest rates increase, the value of call options will generally increase. As interest rates increase, the value of put options will usually decrease. For those reasons, call options have positive Rho and put options have negative Rho. And I know you guys are thinking that these option contracts can be confusing or difficult to understand, but what I believe is the best way to learn is to take these concepts and go on to your trading and apply them and look how different option contracts move, because screen time is the only way you'll actually learn anything. And these are just general descriptions of what these specific Greeks are and how they should be used when finding your option contracts. Next, we're going to be going over a few options vocab, starting off with the bid. The bid is the maximum you're willing to spend for a specific contract. The ask is what the sellers are asking for that contract. ITM is in the money. In the money means your contract is very close to the strike price, but it's not at the strike price, and these contracts generally move better. Next, you have ATM, which is at the money, and this means that your strike price for your contract is at the underlying stock value. So it's moving with the stock, and these contracts generally move the slowest, but they also have the lowest risk. Lastly, we have OTM, out the money. These contracts move better if price is going in your direction, but if it's not going in your direction, then these contracts have a lot more risk and tend to lose value quicker. Next, you have the spread, and this is something to take a look at because this shows the difference between the bid and ask. So it's important to look at this because if a contract has high spread, this means that when you buy this contract and as soon as you go to sell it, you're already going to be down on the contract because the spread is high. It's a widespread, and that's not something you want to look for when you're looking at these option contracts. And now we have limit order. This is when you buy a contract at a specific price. Market order is when you're buying a contract at whatever the market price is, and that's usually a little higher than limit order. So if you find the concept of options trading to be interesting and it's something you're interested in doing, it's very simple to do. You want to go to your stockbroker account and apply for options. It's not something that's given to you straight off the bat, but it's very easy to get approved on. And once you get approved, you have the ability to trade from 9:30 to 4, Monday through Friday. And trading could be seen as gambling, but for proven strategy, it isn't gambling and you have an edge over everyone else. So now you want to find a day trading strategy that best fits your personality and your type of trading. And now you're just going to charts, use your analysis, and make a prediction on the stock. So now I'm going to be showing you guys the options chain on Webull just to go over everything we learned in this video. As you can see right here, I have the SPY options contracts pulled up. As you can see, we have the date you choose is what you're choosing to make your bet on, whether it's March 3rd or March of 2024. You choose a date based on your type of trading, whether it's a day trade, a swing trade, or a leap trade. So now you just want to select a day, and you're presented with all these different strike prices. The left side is the call slash bullish side. The right side is the bearish slash put side. So if you were bullish on a stock and you wanted to play calls, I'm going to be showing you guys how you could place an order for this. It's pretty simple for this example. I'm going to be showing you guys a SPY 397 calls. If I wanted to play these calls specifically, thinking SPY is going to go over 397, I would have just clicked this red box right here. And now I have an order entry to buy this contract. If I wanted to sell it, I would click the bid box. And now I have an order entry to sell this contract. As you can see, the spread on this contract is only $1, meaning when I buy this contract and I go to sell it and nothing changes, I am only losing out on $1. You want to make sure you're looking at the spread, because if a contract has a high spread, you're losing money as soon as you buy the contract. For example, the 384 calls, you can see if you buy it for 12.80, you'd only be able to sell it for 11.97, and that's almost $100 loss by just buying the contract. Something else to look out for is the open interest, and this shows you the amount of contracts that have been opened for that specific strike price and this specific date. The higher the open interest, the more people are interested in that specific contract. Something else to look out for is the Greeks. That's the delta, gamma, and theta. Vega is the implied volatility, and these are Greeks that I went over. And this is something, like I said, I recommend you guys learn with screen time. As you can see, all these different contracts have different values, so they all move differently. And it's important to know what all these values mean and how they affect the contract's value as the stock goes up or down. So essentially, that's a pretty brief description of options trading. It's how to look at contracts. I hope you guys found this video to be helpful. If you want something that's more in depth, I could spend more time going over every detail of options and how to choose contracts. Please let me know down in the comment section below. Overall, I think this is a great video for beginners and people that are interested in pursuing options trading. If you learned anything from this video, please make sure to leave a like. If you found this video to be helpful, leave a comment, share it. Thank you guys for watching, and I hope to see you guys on the next one. Peace out.